Hello friends, you can find an information in front of us that is it's relating to the cash flow statement. I am provided with the notes to accounts here. In the given information, I am given share capital for the year 2018 ending and 2019 ending, which has increased with 1 lakh rupees. It means there is issue of equity share capital during the year with rupees 1 lakh, and security premium reserve has increased with rupees 5000. These are reserves and surplus. This is security premium reserve, which has increased to rupees 5000. That means the equity share capital was issued at a premium. This is just a guesswork. We will go to the additional information also. Journal reserve, which has increased from 80,000 to 1 lakh. That means from profit and loss account, from our operating profits, how much profit was transferred to the journal reserve, that was 20,000 rupees. So as we used to take that this activity should be considered in financing, this should also be considered in financing, and this is to be considered in your operating profit ratio, right? Then surplus and balance of statement of P&L account here from 1,70,000 has increased to 2,14,000. That means there is an increase in the profits during the year with 45,000. This should also be taken to your operating profits. Then long-term borrowings given 10% debentures, which have also increased with the value of rupees 1 lakh here. It means there are issue of 10% debentures during the years with rupees 1 lakh. So this would also be considered in your financing activities. Now for the notes to accounts, we are clear which are to be considered in which activity. Let's go to the additional information. Equity shares were issued at a premium of 15% on 1st of April 2018. Now, if the equity share capital here has increased with 1 lakh rupees, which was issued at 15% premium, then issue of equity share capital 1 lakh at 15% premium means 15,000 was premium on the issue of equity share capital, right? So, we should consider in our cash proceeds from equity share capital under the head financing activity for how much value we should consider it, that is 1,15,000 rupees. That is 1 lakh was the equity share capital and 15% premium we issued. So how much premium was received? That was 15,000. So total value we received by issue of equity share capital is 1,15,000. Then next point. Additional debentures were issued on 1st of October 2018 at a discount of 10%. How many were the additional debenture issued? Here is the difference of 1 lakh rupees. That means the debentures were issued at a discount of 10% for 1 lakh. So 1 lakh rupees discount here is 10,000 rupees. Okay, so 1 lakh shares which were issued at 10% discount, 10,000. So what is the proceeds from issue of the debentures? That is 1 lakh debentures were issued but at a discount of 10,000. So how much money we received? Actually rupees 90,000 here. Equity share capital was issued at a premium but debentures were issued at a discount. So premium was added but discount is deducted to calculate cash flow from financing activities. Now in this point it's also mentioned to us the company wrote off the discount on issue of debentures from security premium. So how much security premium we actually received was rupees 15,000, right? And how much was the discount? That is 10,000. And how much is the balance in the security premium account given to us? That is 5,000 rupees here. Actually what I want to say, let's see from our account, that is security premium account. What is given to us in the security premium account? When we issued the share capital, we received a balance from issue of equity share capital. 15,000 was received as a premium, which was used to write off discount on issue of debentures 10,000. So what is the balance in the security premium account? Balance carried down is of 5,000. So in this case, what I just want to tell you over here, that we have already done the adjustment for 15,000 and 10,000. So this balance carried down 5,000 rupees does not require any adjustment because we have already accounted for 15,000 and 10,000. 15,000 we added in equity share capital and 10,000 we deducted in security premium. So these amounts will now nowhere else would be taken, and this balance carried down will not be used somewhere else. Okay, so next point over here is interim dividend paid during the year is 25,000. Now interim dividend that paid is a financing activity, should be deducted in financing activity but should be added in operating activity, right? So it is given a deduction from your financing activity and are added in your operating activities, right? So next we have taken over here net profit earned during the year, which we talked about surplus here, that is surplus in P&L. So net profit earned during the year was 45,000 and transfer to reserve was 20,000. So here it is, net profit earned during the year 45,000, transferred to reserve is 20,000. Rest full question is done except one point. The point here is 10% debenture. So the point pending is for interest on debentures. Now to calculate the interest on debentures, it's given to us that additional debentures were issued on 1st of October. That means these debentures were from 1st of April to 30th of September, and when on 1st October we issued 1 lakh further. So from 1st of October till 31st of March, how many debentures were there? 2 lakh. So 1 lakh rupees rate of interest is 10%. And how many months are there? They are 6 months into 6 divided by 12, that is April, May, June, July, August, September, right? So we got 6 months from here. So 1 lakhs 10%, 6 divided by 12, it gives you a value of rupees 5,000 here. Okay, then 2 lakhs 10%, 2 lakh rupees 10%, again 6 divided by 12. So when we calculated for this value, it is rupees 10,000. So how much is the total interest payable? That is 5,000 plus 10,000, 15,000. Now again, interest on debenture is financing activity. It will be deducted in your financing activity and added in your, that is operating activity. So interest on debenture is added in your operating activity. So for the given question, we have calculated cash flow from operating activities with these adjustments, or you can say profit earned during the year. When we took, this is the operating profit before working capital changes, and this we have calculated cash flow from financing activities. Thank you Accountitude. I hope the question is clear to you. For the following given adjustment, there were new points regarding discount on issue of debentures to be written off from security premium. And like, share and subscribe to my channel. Thanks once again.